Hi, this is Alessio. Hope you're well, and welcome to a brand new update on the financial markets, and also a brief mention of Bitcoin in this video as well. Now, in this video, what I want to talk about is now that the stock markets have made all-time highs, new highs, in fact, on the stock markets, is it time now to bet against this market? Is it time, for example, to short the markets? Now, before we go into that, you'll probably notice that I brought back the green screen. So the green screen has made a reappearance, and that means I can put whatever I want now behind me. For example, I could put one of my favorite episodes of Family Guy behind me, as you can see here. By the way, Peter, what do you think of the UK stock market? You see, guys, even Peter can't stand the UK stock market because, let's face it, guys, the UK FTSE has been dragging its dead carcass for weeks now and still got nothing going. Anyway, let's go on to the financial markets, and of course, we'll mention Bitcoin at the end of the video as well. So what I want to talk about in this video is this. The markets have made new highs. The S&P just recently made brand new highs, all-time highs, something that I predicted would happen way back in April. Here's a quick clip from my interview on Cointelegraph back in April. So I would say, forget the economy, forget the economic reports, forget all that bad news, focus on the price. I think we could make all-time new highs. I actually think by this year we'll make new highs. So guys, as you heard me say several months ago, back in April, I was expecting this market to eventually make new highs, and we just hit those levels very recently. Now you might be thinking at this moment, well, surely now that we've made new highs, surely now it's a time now to bet against this market because we're getting close to potentially another crash, maybe another correction in the market. Now, let me say this. It is true that I'm expecting or anticipating another major drop, a correction, shall we say, in the markets. I'm not expecting a crash like we did in March. So I'm not expecting a catastrophic collapse in the markets like we did in March. No, I'm expecting a correction or retracement in this market, which I think is quite plausible and quite likely in the next few months as we get close to the election, the US election. But I don't actually think we're there yet. I don't think we've reached the top yet in the markets. I think there's still potentially more momentum and perhaps a bit more further upside in this market. I think the upside is limited. Don't get me wrong here. I think the upside in this market is limited. So even if we go higher, I don't think we're going to go massively higher. Okay, so I'm not expecting that. In fact, statistically, future returns, the short-term returns in the stock markets, if we get any, are likely to be quite mediocre or quite poor, actually. So I do think we need to be patient before we see a top developing in this market, in the stock markets. But here's the thing, guys. What I would suggest you do is get this book and read it. The book is called Japanese Candlestick Patterns by Steve Neeson. It's a fantastic book. Some people say it's like the Bible for chart analysts, especially for those of you who look at candlestick chart patterns. But I would say, look, you don't actually have to know. Here's the thing, guys. This book, it's fantastic. It's great. But you don't actually have to know every single pattern or every single, particular Japanese candlestick chart in this particular book. You only need a few. And the reason I'm mentioning this book is because this book mentions some interesting patterns which develop usually before a market crashes. Okay, so the reason I'm talking about this book is because usually when you see a couple of these patterns, like these chart patterns on the charts, they usually precede a major crash in the markets. Not always, not every crash is preceded by these patterns, but quite a lot of them do, I think, in my opinion. So let me show you a couple of these bearish patterns on the markets. One of them is called the shooting star. So this is in chapter, I think it's chapter 5. And here in this book, it mentions specific section on shooting star patterns. If you don't know what a shooting star candlestick pattern looks like, it looks like an upside down hammer, sometimes an upside down cross, like an upside down doji. And what you're looking for is you want this pattern, this upside down hammer or upside down cross, to occur at the end of a rally. So you want to see a rally, an uptrend first. This is very important. So, for example, you see on this chart, I've noted, as you can see here, I've noted the number of shooting stars here. I've labeled them SS here. But the fact is, not every one of them is a candidate for a shooting star. Only one of them is the one at the top. Okay, so what you want to see is you want to see the market rallying higher, going up and up and up, okay, using an uptrend. And then you want to see this kind of an extreme looking sort of upside down hammer or a shooting star pattern that you're seeing right there. By the way, just to let you know, one of my great friends who used to work for Goldman Sachs, he actually was the one who introduced me to this particular pattern. I remember he used to trade this particular pattern a lot. But essentially, one of the good things about this pattern, why it works, is because when you see a market rallying higher and higher, going up, and then you see this upside down sort of hammer-looking pattern, the shooting star pattern, what it's telling you is that higher prices are getting rejected. So you see, I've noted on my chart, bearish upper shadows, those bearish wicks, those long wicks on the chart, the upper wicks. So what do they mean? It means those higher prices are getting rejected. Sellers are coming in and essentially rejecting those higher prices, essentially beating it down. So that means sellers or bears are potentially regaining control here. Okay, that's why this pattern is quite bearish. Higher prices are getting rejected and prices getting pushed down, bringing about forming this kind of bearish shooting star pattern on the chart. So that's one pattern. And again, you can read more about it in this book. But if this pattern forms, you want to look for it on a daily or weekly chart. I think weekly chart would be much better than a daily chart personally. But again, you want to look for it on a higher time frame chart. So that means if I see something like this on a chart, especially when the market is overbought, over bullish, and overextended and overvalued, like for example, what the stock market is right now. The market is definitely right now, I would say the stock market is overbought, overvalued, over bullish in the words of John Hussman. So in this kind of situations, when one of these shooting star patterns form, then I would consider potentially getting bearish and indeed getting short on the market. Hasn't happened yet, but it's something I'm going to look for if it happens. The other important bearish pattern which you can look for in a chart is called the bearish engulfing pattern, which you can see here in this chart. Okay, I'll put it for you on the screen so you can see it. Bearish engulfing patterns are also very useful and very effective. Steven Nielsen actually shows an example of it in his book, and here's what he says about it. He says what you want to see is first an uptrend. Okay, you want to see the market, first of all, the price going up and up and up, so going higher, and then you want to see two candles.
4 candles.
That's 2 candles, not 4 candles.
Here you are. 4 candles.
No, 4 candles.
Well, there you are. 4 candles.
No, 4 candles. Handles for forks.
Some of you know the joke, by the way, from the 2 Ronnies. Yeah, okay, so it's not 4 candles, it's 2 candles. So you want to see 2 candles, and the candles must be different in color. So for example, the second candle, the bearish engulfing candle, must be red, negative, but the first candle must be green or positive. So you want to see a positive or a green candle followed by a bearish candle. Okay, so for example, if you're looking on a black and white chart like this, the first candle must be hollow and then followed by a dark bearish engulfing pattern. Okay, so they must be different in color. All right, guys, and of course you want the bearish engulfing candle to completely engulf, to completely encompass the first candle. It must engulf the body of the first candle. So that's called the bearish engulfing pattern. And when this pattern occurs at the end of a rally or the top of a rally, it usually is quite a bearish pattern. And if we're lucky enough to see something like this on the charts, then again, I'll be looking to bet against the market as well. Now, before I finish, let me just say 2 more things. The first thing I would say is some people have said, well, look, this market probably won't crash because the Federal Reserve just won't let it crash. You know, you see this argument a lot right now. People are saying, well, this market will probably never crash, never drop again. You will never see a correction because the Federal Reserve is just going to pump more money and we're never going to see a correction or crash. I don't accept the logic of this argument at all. And I'm sure if you're an experienced chartist, or if you're an experienced trader, I think you'll agree with me on this point that the markets are primarily ruled by emotion, by human behavior. It's not so much the fundamentals, that it's mostly about human emotion, human sentiment, and it's the technical, the price action that matters the most. Just to give you some examples on this, back just a few months ago, back in January, at the start of this year, the beginning of this year, when the markets were rallying, making new highs at the time, people were saying at the time back then that the markets will not crash because the Federal Reserve will not allow it to crash. You kept hearing this thing. Even last year in 2019, when I was calling for this market to drop last year, and even at the beginning of this year, people were saying to me, no, the plunge protection team, the Federal Reserve won't let it crash. But of course, it did crash. The market's at a 34% drop from the highs, and that caused a lot of panic selling, a lot of emotion in the market that caused a significant drop and eventually capitulation in the market. And by the way, guys, when the market dropped quite heavily back in March, do you remember what people were saying? Back in late March and early April, when I was saying, look, this market has bottomed and we're starting a new uptrend, people were saying, no, this is a bear market rally. This is a fake rally. It's a dead cat bounce. This is not a real rally. It's not a bull market. But of course, they were wrong. And when you asked them why do you believe that? They were saying, well, we got a pandemic and we have a massive economic depression. We have a recession and massive unemployment. There's no way this market can possibly bottom. There's no way this market can possibly go up and bounce. That's what people were saying after the crash in March. But of course, you see now, they changed their message. Those very same people who were saying we cannot possibly bounce, they're now saying, oh, the Federal Reserve won't let it crash, which is complete and utter nonsense, guys, because the fact is, This market, all markets are ruled by human behavior, human psychology. And guys, I would suggest for further reading on that, make sure you read these books, Market Wizards and the New Market Wizards by Jack Schwager. Fantastic books. All right, guys, before I finish, let me just say one thing. Should the stock market eventually roll over and start a correction, I do think Bitcoin will also be dragged down with it because of the correlation between Bitcoin and the stock market. So I think it's inevitable. It's without a doubt very likely that when the stock markets eventually roll over and start a correction, which I think will probably happen as we get close to the election, the US elections, I think it will drag Bitcoin down with it too. Very likely. And by the way, that's actually a good thing because it will allow a potential new buying opportunity for Bitcoin as well. All right, guys, thank you very much indeed. I'll see you guys in the next video update. Bye for now.